Since this time last year, I am down not 1 million, not 2 million, but $3 million. Let that sink in for a moment. $3 million. Now, in this inflationary environment, that gets you about 3 cheeseburgers from McDonald's, okay? In all seriousness, guys, I want to speak about that for a moment. The majority of this video is actually going to be talking about what's going on this week. It's a massive week in the market. Several and very important companies to me are reporting earnings. I want to talk about my expectations for those, what I think is going to happen with their stock prices, what I think is going to happen with their revenues, EPS, all those sorts of things in this video, and kind of get you guys prepped up for what's about to happen this week, essentially, which I think is very important. But I just want to speak for a moment on what I learned over the past year, right? And you're going to learn something when you go down $3 million. You're going to learn some things, right? And I would say the biggest takeaway that I can say I've learned over the past year is the notion of don't fight the Fed. It's a real thing, man. And the thing is, it's one thing to fight the Fed and let's say buy stocks if they're raising interest rates, and they're like doing normalish moves. It's a whole other deal when they're the most aggressive Fed we've seen since the 1970s. We've gotten a Fed that is like Mike Tyson in his prime we have to fight. And it's brutal. It's been brutal to fight this Fed. Awful, okay? And so that's the biggest thing I could say I've learned is fighting the Fed is a really tough thing. And especially when they're out of control, raising rates like they've been obviously this year. Now, if we go back in time, right, I'm sure we all would have sold every stock we had back in, a year ago, right? But, there's an issue with that. Even if you could see this coming, right, where you believed and you made a prediction that the Fed was going to raise rates at the most rapid clip we've pretty much almost ever seen them at, right? Or certainly since the 1970s. Even if you believe that, then you would have to sell out of your portfolio and then, buy back your stocks at the end of this year or whenever it is, right? Or maybe you were already bought back in. But the issue you kind of go into there is that you get into the timing game, right? And now you're trying to time your portfolio and sell out and then buy back and sell out and buy back. And the problem is this is not the last very scary situation that's going to transpire in the market. We're going to see many other scary things happen over the coming years. And it's really tough to say, okay, I should sell my portfolio now, but versus another time, and that gets you, the greatest investors in the world will tell you, don't play that game. Don't even get sucked into that. It's a sucker's trap, right? That's what every single one of the greatest investors in the world will tell you. It's a sucker's bet. Don't get tied into that crap. It's going to send you down a bad rabbit hole. Let's just call it that, right? But I'm certainly we all would have done better if we had done that. It's just like, you have to have the foresight to do that, then get back in the market. And like, when do you get back in the market? And then you have to say, this is my one time I'm going to do this. I'll never do this in the future, right? And that's a tough thing, because if you got this right and you were smart enough to get this right? Dang, you're going to have a pretty big, confidence boost. Let's just call it that, okay? And then you're gonna try to time the next one and the next one and the next one, because this isn't the first or the last scary thing that's going to happen in the market. There's going to be a whole lot more in the future, and so that's just a very tough game to play, is that whole timing game. But I would say that's the biggest thing I learned, is fighting the Fed is no joke, man. And this Fed is, like I said, it's Mike Tyson in his prime, and it's ready to knock us out, and it's knocked out most investors, and the rest of us that haven't gotten knocked out, we've gotten maybe a concussion or two. Let's just put it that way, okay? So let's get into this, guys. A lot to discuss in today's video. I appreciate each and every one of you that subscribe to this channel. Thank you. A lot of important stuff to talk about what's about to happen this week here and my expectations here, okay? So first off, before the stock market even opens on Monday, Palantir is reporting earnings. Now, if you don't know Palantir, they're basically a perfect company at the cross sections of data and artificial intelligence and helping governments or companies use their data in let's just call it a more proficient way, and in a way that hopefully makes them a whole lot more money than the cost of spending on Palantir's product, right? Especially if you're talking about the commercial business, which the commercial business in the last quarter in the U.S. grew over 100%. It's been a phenomenal growth engine, and I expect it to be a phenomenal growth engine for basically this entire decade. So when it comes to Palantir here, they are expected to do $470 million of revenue. I have a feeling they're probably going to beat that number. That's my expectation based upon what I saw guidance come in at, based upon kind of listening to the last conference call a few times, and also just seeing a few other things. I think they're going to beat revenue. That's just my expectation as far as that goes. EPS is a complete wild card, a 2-cent loss. I mean, that's anybody's best guess, in regards to Palantir. So many moving parts there. I feel like Palantirs are really at a very tough stage to try to justify their EPS. I feel like right now it's near impossible to judge any company's earnings per share because of everything going on with inflation and then some companies cutting back their workforce and their capital expenditures. It's a very confusing time in general to try to figure out companies' EPS, but I feel like in Palantir's case, oh gosh, if you can get their earnings per share right, you might be a genius. You might be the luckiest person in the world, because I'm telling you, those numbers are really, really hard to figure out right now, okay? Now, in regards to me with Palantir, so in one of my accounts, I own 3,333 shares of Palantir so far. In this account, I own 1,111 shares of Palantir so far here. So what I'm hoping for with Palantir, if you want to know what big money is up to with your stocks, what Wall Street's doing with your stocks, you have to check out the pinned comment down there and check out Tendies and set up an account with them. It's absolutely free, and they allow you to see unusual options activity that's going on with stocks you're looking into or stocks you own. So let's say, for instance, you own Apple stock. You can type in Apple right here, and essentially all the unusual options activity, all the big moves show up right here. You can see it all into detail. Tendies is a social trading app that's giving away hundreds of dollars worth of tools for free, saving you hundreds per month if you look at what other services charge for the same stuff. I personally love the options flow, which is unbelievably helpful at predicting price movements in the options market. I also want to show you Brokerage Connect, where you can integrate your portfolio so you can monitor your performance and do the necessary research to be profitable in this environment. All the due diligence in one place, and you have access to constantly refreshing feed of information relevant to you in your portfolio. So make sure you click the pinned comment down there to get free access to all of this I showed you in this video here today. That will be pinned comment. I hope they actually miss numbers, and I hope the stock goes down. I don't think that's probably going to happen. If I had to guess, I think they're probably going to report pretty good numbers, and their stock's probably going to go up. Remember, this was a stock that started to get hit way before the market. So what we're finding now at this point in time is there's many stocks that are starting to bottom in the market, or have bottomed over the last 6 months or so, and are actually now starting to move into upward trends, while there's other stocks in the market that are still going down. And you look at a stock like Palantir, this stock started to get hit way before. I mean, way before, anybody in the market was really paying attention to kind of what was going on out there, and like, wow, stocks starting to get hit. For a lot of stocks, they haven't gotten that dose of reality till 2022. Palantir was already falling in 2021, significantly off highs. So, I look at this stock as one of those that is going to bottom likely way before. But like I said, I'm hoping this baby goes down on earnings or stays around where it's trading at, because I actually want to at least double up my position or potentially triple up what you're seeing. So I own, let's say, 4,444 shares or whatever right now in Palantir. I would love to get it to like at 8,888 shares, or 12,000, 13,000, maybe even 14,000 shares of Palantir between my different accounts here. So that's kind of my hopes, and that's also my thoughts around kind of Palantir here. I'll be very interested to listen to the conference call as always. It's always entertaining with Carp on those conference calls, okay? Berkshire Hathaway actually reported earnings over this weekend, okay? Now I know what you're going to say. What the heck? Why does Berkshire Hathaway, Warren Buffett's company, report earnings over the weekend? Well, it's Warren Buffett, and he can basically do what he wants, okay? I don't think I know of another company in the world that puts out their numbers over the weekend, but it's what Berkshire Hathaway does. And Warren Buffett, man, with his success in life, I mean, that man can do whatever he wants nowadays. And if he wants to report his earnings on a Saturday, he can report his earnings on a Saturday, okay? Berkshire Hathaway's operating income jumped 20%. The conglomerate bought back $1 billion worth of stock. So now they're at this stage with the company that they're buying back their own stock, which definitely means Buffett thinks the stock's undervalued. Like, they're not going to buy back $1 billion of shares unless Buffett feels like the stock is very undervalued, and he obviously feels like it's very undervalued. The dangerous game with that, in my opinion, is, I feel like every CEO is almost always going to think their stock's undervalued. I think if we went back a year ago, I think the far majority of CEOs, even a year ago, at this point, a year ago, I think most CEOs would have said their stock's undervalued. I think that's just a natural belief. No, I think Buffett has incredible, not just intelligence in terms of business and valuing companies and things like that. I think he has an incredible emotional intelligence in kind of thinking about it like, do I think this stock's undervalued just because it's my own company, or do I actually feel like it's truly undervalued, right? And I think he's a very fair man that I think at the end of the day, he's doing that because he truly, based upon the numbers, he believes that the company is very undervalued right now, okay? Now, look at this. This is very important. They now have a cash pile of $109 billion at the end of September, as compared with $105 billion at the end of June. Here's my prediction. My prediction is Buffett's going to spend like a beast for the next 6 to 12 months. I really think so. I think Buffett's going to be buying stocks. I think he's going to be buying entire companies. I think he's going to deploy capital in the market at a very rapid clip over the next 6 to 12 months. Just my prediction. As a guy that's followed Buffett for like 14 years now, 13 or 14 years, that's my prediction. I think he's going to spend like an animal the next 6 to 12 months. He's been rather restrained. I think he's, I think over the next 6 to 12 months, you're going to see him buying a lot of stocks. You're going to see him buying probably a company or two, just like, straight up. So, that's what they do at Berkshire Hathaway. They acquire companies and they acquire stocks. And I think he's going to be a big spender out there, to be quite honest, okay? Now, something important when it comes to Berkshire Hathaway earnings, and not a lot of people even realize this, okay? Let me explain this because this is extremely important if you want to understand these stocks and how their earnings can move around, things like that, okay? With Berkshire, they own all these different stocks, okay, including their biggest position is in Apple stock. So essentially, if Apple stock goes down, it makes Berkshire Hathaway earnings go down in a substantial way. If Apple stock goes up, it makes Berkshire Hathaway's earnings go up. Even though they didn't sell the stock, it's a silly thing, in my personal opinion, that they would record a gain or a loss based upon a stock price change, but that's the way it has to be, okay? Now, this is very, very important because look at this. Since basically the last quarter ended, Apple stock hasn't gone anywhere. It's basically flat, okay? Now, here's an important thing to remember. If Apple stock goes down in any significant way between now and December 31st, Berkshire Hathaway earnings are going to get hit in a major, major way. If Apple stock goes up in any significant way, right, the only way Apple stock could go up over the next 2 months is if we truly have that Santa's Claus rally, right? If we have that, then obviously Apple stock can appreciate in that market. But if we don't have that and this baby goes down, it will make Berkshire Hathaway's earnings look much worse than it really is, I guess you can say. And Apple's in a really tough position with obviously their biggest iPhone factory being shut down right now. And I have no trust in the Chinese government, so we'll see what happens there, okay, as far as all that goes. Now, for the people that like to, do a little shorter term stuff, let's just call it that, Activision Blizzard's interesting, okay? So if you don't know, Activision Blizzard is expected to basically be bought out by Microsoft at $95 a share. Now, this deal is supposed to go through at some point in 2023. Now, the governments around the world are basically looking at this deal and trying to figure out if they want to let it go through. So it's not even a for sure thing that this is going to go through. If the government allows it, it's going through, basically. Microsoft already announced they're going to spend the money. It's about $70 billion. Microsoft can obviously pull that off. So there's no problems as far as that goes. It's only really a government risk. And if the government says, no, we're not going to let you, and the risk is Microsoft owns Xbox, obviously. So that's the risk that regulators are looking at. And they're like, do we want to let a big video game publishing company like an Activision Blizzard get bought out by a company that owns Xbox, right? So that's what they're trying to figure out right now. So I would call it a coin flip if this deal goes through. Now, if the deal goes through, here's the deal. If you buy Activision Blizzard stock today, it's $71. And basically, if the deal does go through, you're going to get $95 for your shares when the deal is supposed to go through, which is in 2023. They report earnings Monday after the bell. Now, also the other interesting thing about Activision Blizzard, as a stock in general, let's say it wasn't getting acquired, it's not necessarily trading expensive, and they have great gaming franchises, including the current Modern Warfare game, which I think is going to put up incredible numbers for the next year. I think the current Modern Warfare game, I think it's going to put up big numbers, to be quite honest. And so it's a little bit of I call these plays an arbitrage play. And if you're somebody that likes to engage in those shorter term things, it's there for you. It's there for you. That's all I'll say about that, okay? Well, Disney's reporting Tuesday after the bell. Now, interesting thing is I think Disney's actually undervalued, and this is one of the few, I guess you can say, traditional kind of Dow 30 type stocks that is actually undervalued in this market, and you can't find a lot of them. Now, the reason Disney stock's been having some trouble is because, in my opinion, Disney Plus. And so everybody focuses so much on Disney Plus now instead of their traditional core businesses that are absolutely amazing. And everybody's really caught up in that. Now, I think Disney Plus is going to be here for the future. I think it might lose them a bunch of money in the short term and hurt their profitability and their cash flow, but I think it's going to be around long term. There's a lot of there's so many streaming related products and services out there right now. It's a mess. I think there's a few that are actually lasting. I think Disney Plus is going to be lasting. I think Netflix obviously is going to be lasting. I think YouTube TV is going to be lasting. I think Fubo is going to be lasting, and I think HBO is going to be lasting. And all these products serve a different market, right? Disney Plus is obviously very family focused, very children focused, with obviously all this Disney franchise and whatnot. So I think that's going to continue to be around. We know Netflix is a conglomerate of beast. That's going to continue to be relevant, right? YouTube TV, which is a massive streaming player, it's going to continue to be there. It's owned by Google. Like they're huge and they're going to get bigger. Fubo's a streaming service that just continues to attract massive amounts of sports fans, and they're hitting record numbers. They just reported their earnings on Friday. I went over that in a video recently. It's incredible. They're going to continue to be there. And HBO has obviously some incredible franchises as far as shows on that platform. So HBO is going to continue to be there as well. But in terms of Disney, I think it's undervalued. I think it's actually I think one of those stocks that you kind of just buy, throw it in the filing cabinet, make a bunch of dividend money on it over the next 10 years, and you'll likely get good share appreciation as well. Okay, Tuesday after the bell, AMC's reporting earnings. Now, here's the deal with AMC. This is basically kind of a trading stock now at this point in time. It's down to $5 a share. So it's, I still remember when I made a video about, AMC being potentially undervalued at $5. And then, my gosh, after that, the stock went to like $65 and just crazy prices, right? But the issue with AMC stock is it's going to be treated like it's no longer is it that stock that everybody cares about and everybody's talking about. Like that, those days are long gone. That was like a year and a half ago, and that seems like a million years ago in stock market time, right? And so now at this point in time, unfortunately, there's still a ton of people that hold that stock that might hold 10 shares or 20 shares or 1,000 shares that unfortunately, when those people need money, they're going to sell the stock, and that's going to continue to, in my opinion, probably put selling pressure on the stock in just a kind of annoying way for like a year or two. And the other issue with that stock is essentially, if there's no big movies out, no one's going to want to be in that stock, right? And so over the summer, Top Gun was out, so there was hype around that, and that movie did amazing. Obviously, it put up huge numbers, but right now there's no massive movies that are out there, right? And so now it's kind of about like, okay, what's the next huge movie? And I wouldn't be surprised if this is one of those, buy the rumor, sell the news type stocks over the next year or two, where if there's a big movie that's about to come out, I wouldn't be surprised if there's like a big run up, and then when that movie actually comes out, I wouldn't be surprised if the stock starts to sell off while they all of a sudden report great numbers that come through for that movie. But yeah, I think it's just going to be one of those type of trading stocks that a lot of people are going to use as a trading vehicle for probably potentially years to go in the future, to be quite honest, when it comes to that one. Lucid, is a penny stock coming for the stock? I wouldn't be surprised if this is a $5 stock eventually. The issue with a stock like Lucid, right, it still has a $23 billion market cap on it, is this is a company that, in terms of, here's the deal, they're going to lose massive amounts of money for years to go in the future. They're going to have to dilute shareholder value to the ground, and they're in a horrible, in my opinion, horrible position. And this is the worst market you could pretty much imagine for trying to run a massive money-losing company that you need to raise ridiculous amounts of capital, right? There's some companies that are money losers and they need to raise very modest amounts of money. Lucid's not one of those. They need to raise ridiculous sums of money over the next few years to stay alive, okay? To stay alive. They're going to need to raise ridiculous sums of money. And this, I'm telling you, it's the worst environment to run one of these sorts of companies. So although I think Lucid's done a decent job, I went out and drove to their big facility in Arizona one day last year, and I think they're trying, but the problem is they're going to continue to hemorrhage money at a rapid clip, and I don't know how well they're going to be able to fund their future growth plans. Let's just call it that. We'll leave it there. And so I wouldn't be surprised if that eventually is a penny stock. And maybe at that point in time, it's kind of an interesting play. But for right now, no. And the problem is with Lucid, their brand doesn't stand for anything right now. That's another issue. But that's at least their issues. The main issue for them is they're losing massive amounts of money. They're going to continue to lose massive amounts of money. And they're going to need to raise, likely billions, if not $10 billion plus over the coming years. And to do that is in my opinion a very uphill battle for the next 1 to 2 years. Okay, Rivian, they're reporting Wednesday after the bell. The good news with Rivian is obviously they got that massive Amazon backing there. I have seen a lot of Rivians actually around Vegas recently, which is interesting. But this is another one of those stocks that's down 70% or so year to date, and just a tough environment for these companies. It's a very different environment than when Tesla. Elon Musk really. He was ahead of the curve. The thing is, with Tesla, would Tesla have survived if it was in this sort of credit environment? I don't know. We can never go back in time, right? But, Tesla almost went bankrupt in the great financial crisis. Elon Musk would tell you that, right? And Tesla, along its journey, has had obviously they had to raise ridiculous amounts of money. But the good thing for Tesla was once they got through the great financial crisis, they went into a time period when, obviously Fed funds rate was near zero for, like a decade, and so they were able to raise, insane amounts of capital in a more, let's just call it toward risk on time, versus these companies are losing incredible amounts of money, and they're going to have to raise money in very tough times. And Elon Musk is Elon Musk. He was able to get the money needed during the great financial crisis and make people believe. Is a gentleman that's leading Lucid that type of guy that's going to be able to convince people to give them billions of dollars in a very rough environment, right? Is the gentleman that's leading Rivian, is he that type of person, right? You got to ask yourself this. And I don't. There's one Elon Musk. That man's the best salesman in the world. And I'm just not so convinced all these other people are, to be quite honest. And so, it's a tough road ahead, no pun intended, for many of these different stocks out there, okay? Dutch Bros reporting Wednesday after the bell. Now, this is a W, man. The stock's only down 36% so far this year. That's a win in this market. And especially for a stock that went IPO last year, kind of a hypey type stock. I love Dutch Bros. I'm a huge believer in their business model, obviously, which, selling $5 coffee drinks is a pretty good business model. Starbucks taught us that, right? But the interesting thing is, so this is kind of interesting on two fronts, and I think this matters in a significant way. What did Starbucks tell us? Starbucks told us essentially that, same-store sales are incredibly strong, and they put up incredibly strong same-store sales numbers. No, that's good because it gives you some intel that, if Starbucks sales are pretty strong, probably pretty strong for Dutch Bros as well, right? Probably. The issue is now there's higher expectations. So if Dutch Bros reports kind of disappointing same-store sales or something like that, right? People are going to be looking at like, wow, Starbucks reported this and Dutch Bros only reported this. So now there's like a higher expectation. It's kind of like being the little brother and your big brother was really successful at something, right? And you're like, oh man, I got this big expectation in front of me now. And that's the one issue going into these earnings for Dutch Bros. Dutch Bros is a stock I could potentially get in at some point in time, just not interested at the given moment. There's too many other stocks out there. Wynn Resorts is a stock I own on my dividends only account. They're reporting Wednesday after the bell. Now, why can't I buy more Wynn Resorts stock? The stock's down 16% this year. It's obviously, this used to be a stock that traded $150, $200 a share, $70 here today. Why can't I buy a bunch more shares of stock? I'll tell you why. The Chinese government. I've watched them, for the past 2 years or so. It's been more than 2 years, actually. It's going to be getting close to 3 years. Kind of open up Macau, then close Macau kind of down again, then kind of open it up, then close it down, and then make it incredibly hard to even travel to Macau, especially if you're a Chinese citizen. And at this point in time, I can't trust the Chinese government. And Wynn has their premier property in China. Well, it's in Macau, but basically Macau is part of the Chinese government, okay? And so it's just an impossible situation with this stock, and it's very frustrating because the company's phenomenal, their properties are phenomenal, but with the Chinese government and obviously their lockdowns left and right here, it's just I can't buy more of the stock because I don't know when ever no pun intended, I don't know whenever they're going to actually have Macau fully open, like fully open, and like for real, and like it's lasting. Not like, oh, it's open for a month and then we're going to lock back down again. Like, that's the problem with this one, man. And it makes it a very, very, tough one for me to just say, I can't buy any more of the stock. And it hurts me to say that, but I can't, okay? Now, Wednesday after the bell, Unity Software is reporting. And this is another Cathie Wood stock. Now, what we've seen from these Cathie Wood stocks is almost all of them continue to get hit lower and lower and lower and lower, including obviously Roku recently. And several other stocks that obviously Cathie owns, right? And so this just continues to be a very, very tough environment for her stocks. Unity Software down 82% this year. It's an incredible fall. Now, the thing I will say about Unity is I like their business model, and they also have very impressive growth, and I think they're going to continue to have impressive growth in the future. And they're about to turn the corner, it looks like in 23 in terms of profitability, where they're going to go from a money-losing company to likely, at least on a few quarters, a money-making company. I think that's big, and I think the company will command a different type of valuation when that plays out. So I actually, of her stocks, actually Unity is one I kind of like, and I wouldn't be surprised if that one actually performs pretty darn well in 2023, to be quite honest, okay? Now, Wednesday after the bell, Beyond Meat's reporting earnings, okay? Beyond Meat will move stocks like the Chef and Oatly on Thursday, essentially. Now, for right or for wrong, it is the way it is, okay? Still, I've got to say with Beyond Meat, so in terms of Beyond Meat, when they went IPO, it was incredibly exciting. The company was coming off of some phenomenal innovation in their food items. They were growing. They had, I don't want to call it a monopoly type market share in the plant-based food market, meat market, right? But they were doing phenomenal. They were the player. Now, what happened after IPO through about the beginning of 2022 is this is a company that innovation seemed to die. They didn't really come out with any new products from basically shortly after IPO to, basically the beginning of this year. So it was like over a year and a half, almost 2 years of like, where's all these new products? And the problem was Beyond Meat was valued like it's a tech stock. Well, if you're going to be valued like a tech stock, right, you better be coming out with innovative products, product after product after product, and keeping that excitement going, right? The problem is Beyond Meat had almost 2 years where they didn't have any major product launches. And I mean, imagine Apple, for instance. Let's say Apple went almost 2 years without launching any new products. No new MacBooks, no new iPads, no new AirPods, no new iPhones. You know what would happen with Apple's growth? I mean, the company's revenues would be down 30, 40, 50%, like insane. So when you are that type of company and people look at you like that type of company, you better keep innovating. And so the company went through almost 2 years of like, where are the new products? Like, what are you guys doing, Ethan Brown? But what I will say is things have changed for the better over the past 6 months in a significant way with innovation, okay? So this is a product that's starting to hit stores. I can't wait to try this product. If you don't know, I'm not fully vegan. I'm like, I would call it, I've switched to like a plant-based diet for the most part over the past 2 years, essentially. I can't wait to try this product. I'm super excited about it. This is actually showing up in some grocery stores now at this point in time. That's innovation. Good job, Beyond Meat. I can't wait to try that, baby. I have pretty high expectations for they also just came out with this product, the Beyond Jerky, a few months ago, and they used Pepsi as a distributor of this, and I've seen it in a ton of different stores out there, and it's a very good product. I really enjoy it. So that's good news. The company's starting to innovate again. They're starting to come out with products that are building excitement around the company. I've also noticed changing in their packaging, which you might think, what's the big deal with changing in their packaging? Their old packaging, in my opinion, was not the best. Let's just call it that. And I've seen a big change in their packaging, the way they're branding their products, and I gotta say it's impressive. So for the first time in a long time, I've got to say I'm genuinely actually getting excited again for Beyond Meat. And at this point in time, the stock's under $1 billion. It's no longer has some tech valuation on it, right? At this point anymore. So now what they're going to have to do is they're going to have to tell a story on why their margins and their cash flows can obviously increase rapidly over the next, let's call it, year or two, because that's the next stage for investors. Like, okay, we're getting innovation back. That's good. I wouldn't be surprised if the stock pops massively on earnings. I kind of hope it doesn't. I wouldn't mind buying some shares and maybe even some 2025 calls. We'll see about that, okay? By the way, for any of the TTCF shareholders, inside the private group, check out the product picks and stores opinion of taste. check out the pictures I posted today in there. I mean, my gosh, that Target was loaded with products all over the place. So definitely check out all those pictures. Incredible, okay? Now, Thursday before the bell, NIO's reporting. NIO's a company I actually like in the EV space. I don't personally own it, and I can't own it. China. Can't trust anything out of them. I don't care if it's NIO. I don't care if it's Baba. You can't trust anything out of there right now, man. And it's frustrating. Very frustrating, because I think there's good companies in China. I think they got some good workforces over there. But at the end of the day, you can't trust anything out of China right now. It's a no touch, and that's tough, man. You know, I think people are just going to treat stocks like NIO, Baba, and these others, in China, just like trading vehicles, essentially. It's a very frustrating ordeal. Thursday before the bell, Honest is reporting. I got so many Honest shares, it's honestly ridiculous, okay? It's honestly ridiculous. So they're reporting Thursday before the bell. Now, I was looking over some past numbers from the company, and essentially analyst estimates for this current quarter, they're supposed to do 83 mil. That's average analyst estimate from what I saw. Now, the household and wellness business was a huge holdback for them, and you really started to see it hit numbers toward the end of 2021 in a massive way. 2020 household and wellness, which was basically just like kind of like sanitizer type products, which obviously in 2020 was incredible. The sales started to fall massively in 2021, and they did like 3.4 mil for that category. Now in this same quarter last year, they did 82 mil, a little over 82 mil in revenue, and analysts have them doing 83 mil. I think they're going to likely beat that number pretty. I don't want to say easily, but I think they're going to beat it. I looked at their last quarter; they did about 3 mil there. So it seems like that category is taken care of now at this point in time, and it seems like kind of a consistent maybe 3 mil type number for household and wellness. So I think there's actually a pretty decent probability Honest is going to beat on this earnings. Now, when it comes to Honest, this is one of the most undervalued stocks I know of in the stock market, if not the most undervalued. It's at a price to sales right now of under 1. If you look at what they're supposed to have for revenue this year versus their market cap, I mean, it's under 1. Now, in their space, their competitors trade at a 3 to 5 price of sales. So, I look at this as just like a slam dunk, massive moneymaker over the next few years. I think it's going to play out that way. You can say, why is the stock $3? They came off of really epic growth in 2020. They went public at the worst time in 2021, which was right when the hype cycle around stocks finished. So they never built up a real shareholder base there. They also have been a money loser. No one wants to be a piece of any money loser companies. And although they're expected to get to profitability, and I wouldn't be surprised if they start putting up some profitable quarters in 2023, no one wants to hear about the future. They want to hear about the now. And when you don't have profitability for the now, no one wants a piece of that, right? And they never were able to build out their shareholder base once again. So that's why it's a $3 stock. And I think the risk reward's ridiculous in this one. It's like what ELF was to me. Honest is like that on steroids. Just to be quite frank, it's like that on steroids. I mean, ELF's been a stock that's returned me over 500% over the last few years. I think Honest is going to destroy that. I think Honest is going to 10x plus my money from where it's at today. I don't think it's out of the question at all to imagine that's a $30 stock in a few years. I really don't. When I look at how cheap this stock's trading, when I look at what I think future growth is going to line up there, when I look at what they're doing specifically with beauty products, makeup products, and how much growth they have in that category over the coming years, when I look at how well they do their marketing and how well they resonate with the current generations, and I think you also got a Jessica Alba and the team is very focused, and I think there's going to be a lot of things that have been headwinds for their profitability and their margins that are going to turn to tailwinds starting in 2023. And so, man, the risk reward is just ridiculous on Honest. And I wouldn't be surprised the stock's up big. We've already seen, like I said, a lot of these stocks we've seen some bottoming type action. And you see this with a stock like Corsair. Did Corsair report great earnings? As a Corsair shareholder, it's a significant position for me. Did they report great earnings? No. They didn't report great earnings. It wasn't like, oh my gosh, this is amazing. This is such a great earnings out of Corsair. But when you're a stock that's been devastated, right? And that stock started to get hit way before many other stocks in the market started getting hit. That was like a 2021 getting hit, right? And this year it just got hit more. At some point in time, all you have to report is not a disaster, and you see your stock pop 18, 20, 25, 30%. And that's what we obviously saw with Corsair there. So, that's kind of my 2 cents around that whole situation. All right. Hope you guys enjoyed this. As always, this ended up being a beast video. I appreciate everybody that subscribed to the channel and joins me for these as always. Make sure you check out Tendies. That is going to be the pinned comment down there, and sign up for Tendies. It's absolutely free with my pinned comment down there, and you'll be able to see all this option flow data in relation to any stocks that you hold. I mean, definitely check it out. Click the pinned comment down there, and type in some ticker symbols of some stocks you own and see if there's any unusual options activity going on with those stocks. It's actually pretty darn interesting. Much love as always. I appreciate everybody for joining me. Have a great day.